If we talk about quarterly results of Deepak Nitrite, then we can see that there has been an increase in sales. Sales is increased by 8%, and there is an increase in net profit as well. We could see that there is an error in this graph, but we can surely see that both sales and profit have increased. In recent few quarters, we have seen that chemical companies have been in pressure. Their margins were dropping and sales was also not improving YOY basis. In fact, they were going down, but we can see signs of results, signs of performance getting improved. We saw that in SRF as well, that though YOY basis results were not so great, but quarter on quarter basis there has been an improvement. Talking about Deepak Nitrite, its market cap is around 35,000 crores and PE ratio is of around 45. If we look at its PE ratio, then current PE of the company is higher than its long-term average, and the reason is quite clear. There has been a drop in net profit, and that is the reason why company's PE ratio has gone up. But if we look at its performance, in last 4 years there has been an increase in sales and net profit both, though the CAGR in net profit is low for 3 years, but for 5 years is 34%. And if we talk about compounded sales growth, then it is 21% for 3 years and 23% CAGR for last 5 years. So we can see that company is giving good sales and profit growth, and we expect profit growth to pick up in coming quarters, and that will get reflected in its stock price as well. If we talk about company's technicals, then company is taking support on its increasing trend line. Company's current stock price is around 2500. If it reaches its all-time high, then there is a potential gain of around 20%. So if company continues to deliver good results, then we can see stock going further up. I think whatever headwinds were there for chemical sector, they are gradually receding, which is a good sign. So this stock can surely be in our watch list. Next stock which we'll talk about is PI Industries. Company's current market cap is 54,000, and company has an ROE of 18.5 and ROCE of 21%. It has dividend yield of 0.28%. Company's current trading at a PE of 34. Looking at its historical average, current PE is less than its average. Compared to other companies in chemical sector, PI industry has not seen a drop in net profit, which is a good sign. And if we see both sales and profit, both are increasing consistently from last 5 years. In CAGR terms, 10, 5 and 3 years CAGR for sales is 19%, 23% and 24%, and for profit it's in high 20s. So for 10 years it's 29%, for 5 years is 28%, and for 3 years is 39%. So we can see that firstly both sales and profit CAGR are good. It is also a consistent performer, and if we talk about its technicals, then its current stock price of around 3,500, and company is near its increasing trendline support. So I think if you are a positional trader and want to invest in companies which are fundamentally good and near its support, then this company should definitely be on our radar. Company is going to declare its quarterly result on 21st. So if there is a good increase in net profit and net sales, then we could see the company's stock price can go up gradually. Please keep in mind that this is not an investment advice. You need to do your own due diligence while investing in any stock. But this stock can surely be in our radar. Company is fundamentally good. Next company which we'll talk about is Hindustan Foods. This company is also planning to show its quarterly results on 21st of May. If we talk about company's market cap, it's 5,600 crores. So company is pretty small. ROE and ROC numbers are decent. ROE is of 21%, ROC of 18%. Currently company is not providing any dividend yield. Look, stock price is 63. if we look at its historical average, company is trading at a PE which is lower than its long-term average, but we can see that the company's net profit is increasing each quarter. If we look at its consistency, then in last few years company has shown a good sales growth. It has slightly tapered in latest year, but company's profit growth is good. If we look at it in terms of CAGR, so for last 3 years company's sales CAGR was around 50% and profit growth was 48%, and company's current PE is less compared to its historical average, that also we saw. Looking at company's technical, company's current trading price is around 500. Company is taking multiple supports around this range, and we did see in the past as well that on 330 levels company stock did took support 3 or 4 times, and then it broke out its resistance of around 500. So looking at its historical chart, similar pattern can repeat in future as well. If that happens, then there is a potential gain of around 50%, since last peak for this company stock is around 750. So this company is also looking promising and can definitely be in our radar. If a company shows a decent growth in its quarterly results, then we can definitely see a turnaround. So investors can check out quarterly results of these two companies and then take a call whether to exit this stock or take an entry into it.